following up with a update on Bitcoin here. And if you've been watching the other videos, you've known that I was eyeing Bitcoin needed to reset already and drop. And here we have it. We've dropped pretty low so far. And my idea is still for it to drop a little slight more here. So what of our what price action is telling us here for this idea? So we have the 263 day EMA has finally crossed into a bearish zone. As you can see here, normally when we're rising, price action is rising, right? We start spreading into a bullish. Normally the 63 is above the 200 and price action follows that trend. But if you can see here, it's crossed over, so that means we're bearish. So the 200 is above the 63 day EMA. And what we have here is we have Fibonacci drawn out with your discount and premium, right? If you're shorting. And let's get rid of the daily EMAs actually. So we have that, and then we have a 1 week fair value gap here. It's a bearish fair value gap. So what it's looking like here is this price action is rising, right? Because on the daily time frame that we're on, we went way below the oversold area. And as you can see, what it's happening here is it seems like Bitcoin wants to reset the daily RSI for us to drop lower, which works out with the price action here. So we have what it looks like a bearish flag forming. You have your flag pull, and then we have a price action here um, rising, and this channel formation here, which would be your flag. So my idea is price action comes up to here to the 1 week fair value gap. You have your Fibonacci, reaches into this zone right here, which would line up perfectly with that fair value gap. And you have your EMAs as well here to act as resistance. This should push us down to continue my further targets. So on the big Fibonacci we have, which is this one, drawn out, it would work perfect as well. If it pushed us lower, we would pass the equilibrium, which is the 50-point mark here, the 0.5 mark, sorry. And it would reach into this monthly fair value gap as well. These would be the other targets, the 3.5, 4, and 4.5 here, which line up perfectly as well with the Fibonacci and the monthly fair value gap. So the targets would be between about 50 and 60,000. And so once we reach up into this area, this should reset the RSI pretty good to where it continues to drop. Moving on to the weekly time frame. As you can see, the RSI on the weekly time frame is pretty low. It is in the oversold area. But what I've noticed is once the Bitcoin cycles are over and they reset, they like to fully touch the bottom part of the RSI channel here. You can kind of think of this as a Fibonacci as well, where this is overbought. This is equilibrium, which is the middle. You're getting at a fair value. And then all the way down here, of course, would be oversold. And as you can see, every time it resets, touches down here, touches down there, and here it hasn't fully touched yet. So this would work as well, kind of to bring up the weekly RSI a little bit, just to give us a little bit more wiggle room to drop down. So this will bring us down here. And then on the monthly, kind of similar, you can see RSI likes to drop below the 50 mark, right? You can see it reaches under the bottom, goes to the bottom as well. Every time it resets, each Bitcoin cycle in here, we're not quite there yet. So once we get down here in this area where I'm eyeing, This would work out perfectly, line up perfectly with the RSI and all the other technicals I have gone over as well. So that would be a perfect area that lines up pretty good. But now, could we just hold here and continue up? Yes, it is possible. Like I said, the weekly is pretty low to where it's resetted enough to go up. Monthly, like I said, I would like it to repeat itself, like how, the saying goes, history repeats itself in the market, which it usually does. That's why I would like this to happen again. But could it not happen? Yes. And then another thing I've noticed as well, as you can see here, right, we've been in a pretty long bull run. Every time it held and came back down, right? It never created a bearish fair gap value gap. So as long as this monthly candle holds, and we have 23 days left, of course, till December is over. If this holds, this will create a pretty good indication that we want to go lower. As you can see here, basically this is just accumulation where candles don't expand anywhere. They just kind of just stay there, have these long wicks. This would be an expansion candle, of course. As you can see, it leaves a pretty big void here, which would be your fair value gap. And same again here, right? When it dropped down here on the monthly time frame, all it did was accumulated down, basically. There's no volume pushing candles in a direction where you can get a bias from. But as you can see here, like I said, we have this fair value gap. If it holds, that would indicate perfectly that we want to go low because there's so much volume, so many orders pushing Bitcoin down, so many sell orders. If you can see here, the last Bitcoin crash, what do we have? A pretty big fair value gap on the monthly time frame, held us here, price action came up, dropped down. Let's see if we had it over here. Over here we didn't. Of course, doesn't always line up perfectly, but that's kind of my idea right now. What you could do, if you don't want to miss out, of course, is buy in this zone, average in. So if you have, depending on how much capital you have or so, average in here, and then if it drops down lower, average in some more, of course. I would like to put my bigger position down here and just maybe, I mean, I would break it down into fours, right? Depending on how much money and capital you're willing to put into Bitcoin. 25% here, maybe another 25% if it drops, and I would like to put 50% down here. But ideally, of course, everybody wants to put 100% here, or maybe even do 25 here and just wait, hold on to your cash, 75% down here. That would be good as well, better returns. So that's my idea so far for Bitcoin. And another thing, let's go over this as well. So these are option orders for the ETF IBIT, and they've been pretty bearish. What I mean by that is, as you can see here, we have a lot of calls, right? Calls are normally bullish, but as you can see, sentiment bearish, right? All these orders. We have a couple bullish ones here and some more bearish ones up here. Basically, how you kind of get the idea from there is calls are bullish, like I said, but when it states that their sentiment is bearish here, basically what I see that as is they're hedging, right? So they're in a position that's pretty big in Bitcoin. They see it still dropping, so what they want to do is they want to collect some premiums from the options. And as you can see, let's see, this is your premium. Look how much they're getting. This is 1 million, so that's a huge position there. And basically, this would be your strike price. They're willing to sell their stock in IBIT, their shares, at $30, $40, $30, $40, right? And they're in the money. So that means they're already in the if somebody buys their contracts, they get executed. So as soon as you sell a call or a put, the market can execute it prematurely, so you don't even have to wait for this expiration date here. They can have it prematurely. And let's take a look at IBIT where it's at first. IBIT basically is the ETF for Bitcoin. If you haven't seen my other videos or if you just didn't know. And what is the price of IBIT right now? 54. So they're willing to sell it at 30, which is all the way down here, right? So why would you want to sell Bitcoin at 30? I mean, the ETF shares at 30 when it's all the way up here in price, right? Why, a normal person that's not too experienced in the market would just say, well, I'll just sell here. I'll get paid more than $30. But maybe they don't want to let go of that position, or they're just trying to hedge, or they're trying to collect that premium, right? Because if you sell at 30, right, you still get that huge premium that you're getting for selling the calls. So that'll make up for it. So realistically, this person, if it gets executed, right, could be making, say, $60. I don't know exactly. I would have to do the math, right? With their premium plus what they're getting here. And depending on where they bought the ETF at, their shares. So as you can see, these are pretty big orders. So 800, that's basically 800 option calls that they sold. And each call is 100 shares, right? So if you have 800 orders times 800, that's 80,000 shares, and that's per order. That's one order here and another order there. So you can tell these guys are pretty big players. And this is just between December 1st and the 5th. You can see that's 1.6, 1.6. We have almost 500,000 there in orders. And then I'd seen a pretty big one over here. Then we have another 1.5 there. This one's pretty high up though. So this guy may just be trying to hedge for sure. He doesn't want his call option to be executed. So he put the strike price pretty high because he's out of the money. So you can't prematurely execute those. He's just trying to collect some premium here. So he collected 1.53 million. And here's the one I was looking for. So you have a short. This is actually a short. So this is a put. They bought it, put, not sold it. The strike price is 59. So they're in the money. So normally when it's in the money, it's not so aggressive. It moves more aggressively as price moves. So you make more money or you lose more money, right? Depending on the direction it moves. But typically, a lot of people read this as they're not so aggressive because as soon as it moves just a little bit down, they can exit out of the position. And like I said, this is a bought position, not a sold option. So they can get out whenever they want. They don't have to wait for the expiration. Um, so yeah. And then if you see here, the premium is pretty big. So they purchased a total of 3.3 million in call options there. And as you can see, that's 3,000 orders of puts. So that's pretty big. And clear that. Let's go to this week. This week is staying bullish, but as you can see, there's a good amount of orders here as well. Another short there. Not so aggressive. Like I said, it's in the money. Another call here. Again, this one's over the current price of IBIT. You have a couple puts here shorting, another one here. You have a pretty big call here, another million. They're willing to sell at the price of 50, or maybe they're just hedging. We move again to another weekly, November. Now this one has a good amount of calls in here, bullish calls, but as you can see here, we have another put shorting, 1.6. And look at these expiration dates. They're pretty far out. This one's 2026, 2027 expiration calls, as you can see there. calls and puts. This one's bullish, but like they said, they gave themselves enough time all the way until January of 2027. Yeah, some more puts here, 2027 as well. These are pretty big orders. And let's clear this again. Let's go back to the first week of December. And this is another thing, right, with these calls. Like I said, they're willing to sell right at a strike price of 30. And these calls are pretty far out. These aren't as so far out, the June ones. So it's only a couple months away. These are bullish calls here. So some people are starting to get into some bullishness there, some traders. Let's look at which one did I want to look at? Might have been a different week that I seen it. Something like this. That I've seen a lot of calls right at 40, between 30 and 40 strike price. And they all been 2027. Like there's some pretty big ones out there, like this one right here, right? 1.5 million, January 27. So a lot of these guys are expecting price to drop more, and they're buying themselves enough time. So these are all pretty far out calls. And with that being said, that's basically my idea. That's what I see here in Bitcoin. May average in just to be safe and wait for this for my targets. My targets right here, which I would love for that opportunity. Again, thanks for watching. Till next time.